Hey, I'll bet you're looking for information on Unilever stock. Well, congratulations, you clicked on the right video. So we're going to take a look at what's going on with Unilever as of late, look at their dividend, and see if I think that Unilever is a good long-term buy. So let's talk some dividends.
Be sure to smash our like button and subscribe to our channel.
So shares of Unilever dropped almost 15% today to new 52-week lows and levels not seen since May of 2020 on news of the GlaxoSmithKline rejection of Unilever's $68 billion bid to acquire their consumer health segment in an attempt to buy their way into higher growth categories. So GlaxoSmithKline's own 68% of their consumer health segment, and Pfizer, interestingly, co-owns the other 32% with them. A lot of analysts think that the $68 billion was a bit of an overpay. Management, as you know, I like to say that these companies are living, breathing entities, so they pivot, they adapt, they're trying to do things to survive, and this is no different. Unilever's management is trying to pivot into a higher growth consumer health segment in the likes of GlaxoSmithKline. They own Advil and Sensodyne, to name a few of the products that Unilever wants to get into. But again, the market and a lot of analysts fear that Unilever is going to put in another bid and really overpay, and then that's going to affect either having to sell off assets or lever up their balance sheet even further, which currently right now is about twice that of Procter & Gamble. Unilever was formed in 1929. They currently own over 400 brands across beauty and personal care, which makes up 40% of sales, foods and refreshment, and home care. Now, 13 of their brands had a turnover of more than 1 billion euros in 2020, and 81% of their brands are top 2 in their market. Unilever's earnings per share and free cash flow per share both remain strong. So according to research done by my buddy, the European Dividend Growth Investor, on his website, click the link, take a visit, tell him hello. He likes when people say hello. He did a ton of research into Unilever's dividend history. Now, they have been paying an uninterrupted dividend since 1929.
When was the stock market crash? 29, right?
They kept paying that dividend throughout World War II, and they have not had a real dividend cut, according to him, since 1966. Now, foreign dividends can be tricky because of the depository receipt nature and currency exchange rate fluctuations. So many US websites like SeekingAlpha.com show a 1-year dividend growth streak and lots of cuts when you zoom out, but it has not been cut in the euro. Also, something to keep in mind when you're buying Unilever here in the United States is they are an ADR, and that carries a management fee with it. So in our case, our last Unilever dividends of $3.48 carried a 0.04 cent ADR management fee, or 1.15%. Unilever's current dividend yield of 4.33% is 38% above its 5-year average of 3.13%, and their forward price to earnings ratio of 15.4 is firmly below its 5-year average of 19.8 and below the consumer staples sector average of 22.1. And Simply Safe Dividends currently has a safe score of 75 for Unilever. So we did add more shares of Unilever. We picked up 5 more shares in the Roth portfolio. By the way, this is the bridge portfolio. If you'd like to check that out, head to dapperdividends.com, click on my portfolio, and you can click on one of the 3 portfolios that we do share. So we added 5 shares to the Roth retirement portfolio at $47.87. And I wasn't done there yet, because when I'm looking at the chart, I see a big gap, and I'm pretty darn sure that we're going to see the 50s again. So I bought one $50 strike call option that expires on August 19th of 2022, and I paid $1.70 per share, so that's times 100 shares. I paid $170 for that. Now, you know my rule if you follow the channel. When I buy call options, which is rare, I always go more than 6 months out, because I want to make sure that my thesis has plenty of time to play out, and I'm very confident that Unilever will head up to that $51, $52 range before the end of August. So there's a lot of negative sentiment around Unilever right now with the market, with investors, their stakeholders. The share price has been stagnant for some years, but they are a big blue chip company, and they obviously do recognize that. And a lot of investors are seeing this as maybe a bit of a desperation play to try and crowbar their way into a new and growing segment in the consumer health area. Now, the market also was a big down day today whenever you're watching this, so I think that helped create more pressure on Unilever, as well as the computer algorithms and stop losses triggering, I think really created a vortex that dragged Unilever down.
You don't drag me down.
But I do think that buyers will be coming in for that high yield, which is now over 4.30%. I think there's going to be a lot of first-time positions started in Unilever, since we haven't seen it this cheap since the spring of 2020, coming out of that pandemic collapse. But I think this is going to take some time. It's going to take some patience for Unilever to recover and get things going so we can get a clearer picture of exactly what they want to do and if they are going to overpay and how they're going to do it for the GlaxoSmithKline consumer healthcare segment. So I think it's a solid company. They've been paying that dividend for almost 100 years now, uninterrupted. That's not going anywhere. A lot of cash flow, a lot of brands that people use in their everyday lives, renewable brands. They run out, they need to buy more. So it's really fantastic, but it could be a little bit of a bumpy ride in the short term. But as a dividend growth investor, I like to look out 10 years, 15 years, and I think that Unilever is going to be just fine. So I'm buying, I'm holding, I'm not going to be selling, and I've got my fingers crossed that we're into the $50 range by August of 2022. Let me know what you're going to do, what you think, what are you doing with Unilever? We want to hear it. Share your opinion, thoughts, comments. What did I get wrong? What didn't you like in the comments below? And if you've ever wondered again about another big blue chip company that's a little bit maligned, is AT&T. I took a peek into their long-term debt and kind of showed you something that a lot of people haven't been talking about in this video. Find out what it is, and I will talk to you there.